Hey guys, good afternoon, everybody. Today is Monday, December 26th. It is 1:56 right now. Our live session or our mentoring session is meant to start at 2 p.m. So I'm starting off a little early today. Had a couple of questions to review, a couple assets over here at GU specifically for Jason. So I'm going to go and take a look at this real quick, and then we'll go over the revision of the breakout strategy for US 30. So just give me a few moments to finish setting up this room. And then once we have everything all set up, we'll get started with our mentoring session for today. So just a couple of things here to update. And we should be good to go. All right. Got that set up. That's good. One more thing over here. And I think we're good to go. Let me get this link sent out to you guys here in the premium. All right. Looks like we're good to go. So just give a few moments for people to make their way in. And we'll get started shortly. All right, cool. So I'll get a few moments for people to make their way in. I'm not sure if anyone's really going to make it today because today is technically a holiday. We didn't trade today for the live session. Obviously, market was closed and it's just reopened right now. It's a few minutes ago. So I'm going to go ahead and just wait a few moments for people to make their way in. If nobody joins, it's completely fine. I'm just going to go ahead and mark up. It looks like some people are making their way in. Mark this up so that people can rewatch this later. All right. All right, looks good. Hey Douglas, how's it going? Merry Christmas to you as well. So, all right, guys, it is about to be 2 p.m. right now. Our normally scheduled weekly group mentoring session is typically on Mondays at 2 p.m. I started a little early today just to get a head start on the session. So if you guys have any questions, feel free to put your questions in the chat. Otherwise, I have one question today from Jason to give an overall analysis of GU. And then once we're done with this, we'll be covering the revision to the breakout strategy. So we'll start off with GU first. And then once we're done with this, we'll move on to the next one. Let me just post this on our other page real quick. And we should be good. So you can get this on our social media real quick. All right. Looks like we are good to go. Hey, iPhone, how's it going? All right, cool. Looks like people are still making their way in. So I'm going to start off first by going over GU real quick for Jason. I'm just going to give him a full analysis, and then I'm going to mark up the charts so I can send it over to him. Looks like he's looking for a sell here for GU. So let me take a look at this real quick. I'll do a top-down analysis from the daily, 8-hour, then the 4-hour to give pretty much, a full perspective as to like where GU will probably be going. So looking over here on GU, and I'll just mark it up over here as well. Overall direction of confluences. I'm not going to put retail sentiment. It's kind of relevant. Fundamentals relevant. 4-hour. 8-hour and daily. Let's see. Maddie said, I like the new breakout at open, very consistent. Yeah. So the reason why I revised the breakout, guys, is because waiting for the confirmation kind of sucks, right? Because sometimes you'll be waiting for it and then it'll never come. So with the new revised version of the breakout, we can analyze it pre-market to see where like price is going. And then we pretty much just take it as soon as market opens and we let that trade run. Since that strategy can be a 1-to-1, I'll probably be risking like a 3%. So it's just going to be hand in hand with the trades that we're already taking. It could offset losses, or it can also give us like double win, because if we're taking like 1 or 2 scalps throughout the session, plus we hit the daily entry, that just multiplies our profit. So I'll go over that a little later, but let me just go ahead and review this real quick. GU for Jason, and then we will go from there. So for the 4-hour trend here, it is bearish. 8-hour trend is bearish as well, but the daily is bullish. So let's see, looking at this over here, off the 4-hour, I'll just maximize this real quick. So this does look for the most part, I mean, short term looks bearish. I don't know if this will hold. Looking over here at the daily, this kind of looks like it'd just be bouncing off the pivots and swinging right back up. So let me just draw a couple of things here. Just what I'm kind of looking at right here. It looks like price can be bouncing off the pivots and could be swinging up off the daily. Looking over here on the 8-hour, this looks like this can be bouncing off the pivots as well, heading down. And then over here on the 4-hour, and this is obviously in a downwards trend. So I'm just gonna take a screenshot of this and I'll send it over to Jason real quick. There's like no alignment with regards to direction, so I can't really say if it's going to be bearish or bullish. So looking at GU, overall direction is indecisive. See from my markups, daily is still heavy bullish. 4-hour and 8-hour, it's bearish. So what are we like? Take so short term, long term. All right, so I just gave a quick analysis to Jason over here. If you guys ever want me to analyze any like Forex pairs or anything in general, just let me know and I can analyze it for you. You guys can see here that I did a pretty quick analysis. Jason's looking to take sells here for GU. I can see sells happening here short term, but the long term, it still looks bullish, like here on the daily. It looks like price just came down, tested the pivot, and it might just be bouncing right back up. However, this can be, a swing to the downside if this continues to drop on the 4-hour and the 8-hour. However, for this week, I'm not really expecting too much movement. It's end of year, so you're probably not going to see too much movement. And if you do see movement, it's probably going to be a lot of manipulation. So that's it for GU right here. Other than that, unless you guys have any other questions, we'll cover the revision to the breakout. This breakout strategy is a bit different, so it's not going to be the requirements are like completely different. So I'm just gonna be calling it a breakout 2.0. It's not going to be a breakout variation or anything like that. I'll just call it breakout 2.0 because this is kind of in conjunction with the daily entry. So for the daily, there's a couple of different things. There's a couple of things that are different between the and I'll just put them up right here. So, and I'll cover the requirements here as well. I'm probably going to be following this one, like the one with the trend, because this one just makes the most sense. This one over here will obviously give you a lot more entries, and you can take it if you want, but you can see right here, if you were to do the same thing the following month, it'd be at a 50% win rate. So it's not really worth it, right? I personally like quality over quantity. So I'm not looking to take every single trade here because I'm just using this as a complement to our scalps, right? Our scalps are still going to be main focus, but this is something that you guys can take pre-market and still make, extra profit on top of that. Because if you're doing each of these trades for about a $3,000 profit, like, if you're on a 200K account, like for example, over here, you would have had 7 wins, 7 wins times 3,000. That's just an extra 21,000 in your account. If you were to take, basically all these trades here, if you were to take these here as only 4 trades, you can see obviously a lot of these didn't align during November because we had a lot of high impact news. You'd still have 4 wins and 0 losses. So obviously I'm still testing it. I went through December, went through November, went through October. The main thing that I need to check here is probably going to be this summer because the volatility is very low. And you guys will know that, typically the dailies and breakouts are hard to take during the summer. If we do take them, we could probably still apply it with a smaller TP stop loss. I'm basically using 2 TP stop losses here. If you look over here at the TP stop loss, I'm using basically either a 1,500 pip TP stop loss or a 1,000 pip. So depending on how the market's moving, I'll show you examples of that and how we will determine, what's going to be used there. So let's see, US 30 momentum and trend. I'm just going to call this, let's call it US 30 breakout 2.0. I don't really have to put requirements there. So I'm just going to put, or let me see, I'm going to mirror it off my other. I probably don't even have to put, I'll just put US 30 there. Or I'll just call it breakout 2.0. I don't want to keep labeling it things that are kind of irrelevant. Like we know it's for US 30, so I'm not going to do anything like that there. So let me just update this. I'm going to do everything in caps so it's easier to see. Confirm trend on 10-minute, 30-minute, 1 hour. And I'm going to go over this trend confirmation thing as well, because the problem with a lot of people is that you guys want to find the easy way, right? So everyone tries to look at the trend meter here. That's not the way to look at the trend. The trend meter is basically going to be the second confluence. The main confluence to look for trend would be the pivots here. And I'll show you how to identify it because I'm going to see some examples here. I've seen it through my testing that you can use so that you can figure out whether it's bullish or bearish, because sometimes the trend meter down here will be red and it's still bullish. Like for example, right here, the trend meter turned red here, but this is still bullish because price didn't really shift yet with regard to the pivots. I'll show you examples when we get to that point, but I'm just going to put the requirements here first so that we can go over everything. So confirm direction of momentum. Enter on opening, on open candle. In direction, I'll also put in direction of and then TP stop loss will be 1,500 pips, 1,000 pips, gauge pre-market range. This is where you'll figure out what your TP stop loss would be. Because, the market's not always going to be very volatile. Sometimes it's going to be slower, sometimes it's going to be faster. But we'll see. And I'll show you exactly how to use that. So also note here, avoid entries on pre-market high impact news days. So this is something that we started to notice a lot more recently with regard to like the inflation news. Like sometimes inflation news will happen at like 5:30. The reason why you want to avoid trades during that time is because you might get a huge correction in the opposite direction of your trade. So here's a breakout 2.0. Let me just change this real quick, or let me go ahead and rewind it to Friday. So I'll just show you the entry that happened on Friday. Entry from Friday is right here. We're just going to rewind it to 6:30, which is market open. And I'll go over the requirements here. So this is going to take a little more work with regard to identifying the trend. I mean, obviously you guys can use the trend meter, but you want to make sure that you really know the direction of trend. And if I see things that are tricky here, I'll point it out. So I'll show you here on the daily, because this looks a little tricky for some people with identifying the trend. Same with the 30-minute here as well. Let me go over here and grab the requirements real quick. All right, so now where did my thing go? Sorry. All right, so let me just go over here real quick and just read what you guys have to say. It looks like some of you guys mentioned something. Natasha said, that's what I was doing for the breakout. Didn't wait for the confirmation, LOL, but I'm glad there is some guidelines I can follow. Yeah, no, definitely, Natasha. I think this is like one that's meant for you as well, because I know you like taking the breakout, but you weren't good at identifying the confirmations, right? Which I don't blame you. It's hard to identify because the candles do get a bit subjective, on open. Question from iPad. He's asking when is that breakout strategy can be taken at 1 hour? It's the breakout that happens on open. So it's only once a day, iPad. You don't take it twice a day or 3 times a day. The only time you take it is on market open. Breakout happens typically when the market opens at 6:30, which is market open time for us. 6:30 Pacific, 9:30 Eastern. So let me put the requirements right here. So let's just go over all the requirements. So first requirement over here is you want to confirm the trend on the 10-minute, right? So I'm just going to maximize this right here. You can see here that price is bearish, right? Reason for that is because price is below the pivots are angling down, and the trend meter is red. So that's like the main confirmation that you're looking for when identifying the trend. I'll show you ways where it'll get tricky, but for the most part, this isn't as clear as it gets, but this is going to be pretty clear, for example, right? Because price is below the pivots. It's not like price is in between the pivots. It's below the pivots. Pivots are angling down, and the trend meter is red. Sometimes these aren't going to line up, and that's where it's going to be a bit tricky. So with the 10-minute over here, you can see that it's bearish, right? Let's go over to the 30-minute now and confirm it here. Looking over here on the 30-minute, you can see that price as well here is below the pivots. Pivots are angling down. However, the trend meter down here is blue. So the trend meter is not going to be the end all be all. If you can see prices below here, and the reason why I can confirm this as well is if you draw your own trend, right? If you draw your own trend channel right here, you can see that price has been bearish. You can also confirm by looking at where price was before this specific price point. Price was bearish right here. This is just a retracement. Price came up, retraced at this point, and then it corrected back down. It was already bearish. So this is how you can confirm that it was bearish. And that's going to confirm that this aligns with the 10-minute. 10-minute was bearish, 30 minutes bearish. Now going over here to the 1 hour, you can see here that this is basically the same thing as the 30-minute, right? So price is below the pivots are angling down, trend meter is blue. So don't let this throw you off. If this throws you off, just turn off the trend meter. You don't need the trend meter here. The main thing you're looking for is identifying the trend with regard to the pivots, because the pivots move faster. This just hasn't caught up yet, right? Eventually this is going to turn red if price continues to stay below, but this is laggy compared to the pivots. Pivots are going to give you quicker identification of the trend, or if you want to draw your own trend lines, I mean, you can do that yourself as well, right? It's the same thing here. Bearish. So with that said, that's going to be requirement number 1, right? Super simple. I mean, it's simple here. It's not going to be simple in all examples. So I just want to make that clear so that when we go over those examples, you guys can see what I mean by that. So looking at this here, we've confirmed everything here is bearish. So it's bearish on the 10-minute, bearish on the 30-minute, bearish on the 1 hour. Let's go back to this 10-minute over here. All right. So next, you want to confirm direction of momentum. So looking back, you just want to look back at the most recent momentum signal, which is going to be right here, the sell signal. This is going to confirm that we're looking for sells, right? If you have a buy signal here, then that's going to confirm direction momentum. Right here, we have a sell. So with that said, you have you have everything confirmed, right? Everything's bearish on the 10, 30 minute and 1 hour. Number two, you want to confirm direction momentum. You just want to make sure these two match so that you know what direction price is going on open. Once you've confirmed that, third, you want to enter on the open candle in the direction of momentum. So you already confirmed everything, bearish trend, bearish momentum. At this point, you're going to enter a sell position right here. And as I mentioned, so you'll go to 1,500 pips right there. One way to gauge this is if you set it up on your chart, if your TP stop loss is like off the chart, right? Like for example, if it's like this, obviously you don't want to be zoomed in like this, but if it's like this and you're zoomed out, then there's obviously going to be like a big difference with regard to, you know, price movement. But if you just zoom out a little bit, you don't even have to do that. Just zoom out a little bit. If you can see that everything here lines up, then you'll be perfectly fine with this here. The times when you want to gauge where pre-market's like a lot slower is when your stop loss and TP is like past where prices move. You can see right here the stop loss is way up here, but there's still room out here where prices move. So once you have this all set up right here, that's all you do. Once the market opens at 6:30, you just hit sell. You have your TP stop loss set up and you let the trade run. See him drops down at TP, comes back for retracement, blasts right through it. And that's literally it. So this will allow you to take this trade and you catch the actual breakout without having to wait for a confirmation. So super simple. That's one example there. If you guys have any more questions regarding this, let me know. Otherwise, I'll move on to the next example, which will be the previous day. We'll just go like day by day by day. And then I'll try to see if there's any examples there, which will show either trades that we avoid, because there's no confirmation of trend on all the time frames, or I'm going to try to look for an example where we gauge the pre-market range where it's a lot smaller. It will be like about 1,000 pips rather than the whole 1,500. So let's see. iPhone said, "Hey Sean, I've got to go to my regular job, finish watching a replay on YouTube." Yeah, definitely iPhone. We'll see you on then. Let's see. Question from iPad asking if I can send the requirements in the chat. Yeah, of course. So I'm going to put this right there. There goes the requirements right there. Let me scroll down a little bit. Steve's asking, can you do analysis for Euro AUD? Yeah, I'll do that at the end of our examples here, Steve. So just make sure you stay on until the end. Once we're done with our examples here, I'll take a look at Euro AUD for you. Question from Jonathan. He says, so you enter right at 6:30. Yeah, exactly. So like as soon as the market opens, you just hit sell and then you let the trade run. Adu has a question asking, if you were taking the trade yourself, what lot size would you use? So if I want to use about a 3%, or not a 3%, let's see, because our max daily loss is going to be 10,000, right, on a 200K account. So if I'm taking the regular scalps, I'm only looking to like risk like one trade, right? So if I lose one trade on a scalp, I'm done for the day. I typically don't keep trading if I lose one scalp. So if I lose a trade, I'm thinking worst case scenario, right? Don't think best case scenario, because whenever you think best case scenario, worst things are going to happen, right? So you want to think worst case scenario. So if I lose a scalp, I'm going to be down 3,000. If I lose a trade here, I'm going to be down 3,000. It's going to be like 6,000, right? I want to have a gap, or not really a gap, but I want to have some cushion in case the broker has slippage, or something happens where like there's a server down or something like that, like especially with TFF, because there's sometimes they're off by like a couple $1,000. So our max daily loss on a 200K count is 10,000, right? So I want to keep my threshold around 6,000. So I want to be risking 3,000 for this specific trade here. I forgot, I think Maddie made a breakdown for it, right, Maddie? Let me check. Let's see, lot size. Okay, so we want to risk about, oh, we didn't put enough here. I'll just redo it. So typically you want to be taking about, this is about 1,500 pips. So let's see. 50 lot times 1500. Oops. It's wrong. 5 times 15. 5 times 1500. It's too high. That's gonna be a 50 lot. Sorry guys, I'm like super off right now. I'm trying to figure out. That's a good question. I'm glad that you mentioned that, we do, because I'm like thrown off because I haven't taken a trade like this where I have such a big stop loss. Okay, so Maddie said 20 lot with 150 stop, 3K. Okay, thanks, Maddie. So yeah, I'd be using a 20 lot because it's such a big move. Typically, when we're taking the smaller scalps, it's only for like 300 pips. So that's why we're taking like a huge, 100 lot, which is equivalent to technically a 1 standard lot. So for this one, I'd be using a 20 lot. So 20 lot is like 20 cents per lot, I believe, times 1500. Oh, $2 a lot, sorry. Yeah, if you're using a 20 lot, it's about $2 per lot per pip. So $2 times 1500. Be risking about 3,000. Thanks, Maddie, for that input there. So that's basically what I'd be using, Madhu. If I'm using a 1,500 pip stop loss, this is the lot size I'd be using, 20 lot. And then if I'm using a smaller one, the 1,000 pip stop loss, then I'd be using a 30 lot. Because if you do a 30 lot, it's $3 per pip times 1500. Oh no, sorry, $3 per pip times 1,000. Same thing, 3,000. So depending on like which stop loss you're using, if it's 1,500, you're going to use a 20 lot. If you're using 1,000 pip stop loss, use a 30 lot. It's both gonna equate to 3,000 risk, which is perfectly fine because your max daily loss on FTMO is 10K. So you just want to make sure that you're within that parameter. So you can like basically lose one of these trades, worst comes to worst, you lose one of these trades. And then if you lose, like if you're having like the worst day, you lose a scalp and then you also lose the daily entry or the breakout, then you're still only down 6,000, which is not a horrible amount because you could still make that back within the week. So yeah, 20 lot on a 1,500 stop loss, 30 lot on a 1,000 pip stop loss. So yeah, John said if all requirements are met. Yeah, so basically if everything here is met, so like when you want to confirm the trend, you want to make sure everything's either bullish or everything's bearish. Once you confirm that, then you can move on to the next step. Just confirm direction, make sure the direction is the same direction as the trend. Once you have that, you can enter on the opening candle. So let's go to Thursday. So Thursday over here, Thursday 6:30. So we're going to do the same thing again here, right? So I already looked at that, clean that up a little bit. Now let's go over here to Thursday. So Thursday, 6 a.m. Okay, so for this one right here, I think I'd probably skip this. I don't know if I took this one. I don't know. Let me see. Yeah, so this one's a little iffy. Let me show you why it's iffy. I took it there because the other timeframes were bearish, but let me show you real quick why this one might have been one that I would have skipped actually. So it's still subjective, but I mean, it just depends on your risk, right? If you guys are okay with like taking a risky trade, you can skip. Well, you don't have to skip it. You can assume the direction of the trend, even if it's not confirmed yet. So the reason why this one over here threw me off was because the 1 hour here hadn't really confirmed, but it looked like it was making its way down. So that's why I actually took it. These are going to be the trades where you're going to be kind of iffy. And if I was on the live, I probably would have taken this because now that I look at it from looking at everything here side by side, it does look pretty bearish, right? So looking over here at the requirements, again, you want to confirm the trend on the 10-minute. Obviously, the 10-minute here is for sure bearish, right? Prices below the pivots, trend meters red, pivots are angling down, super heavy push to the downside. Here on the 30-minute, you can see that prices below the pivots, trend meters red, pivots are angling down. Basically, 3 confirmations there. Confluence is indicating a downwards trend. So the 30-minute here is also bearish. And the 1 hour here, this is what might throw you off. This is why I was saying not to focus on the trend meter down here. because the trend meter is laggy. The trend meter down here is still green. However, if you look here on the 30-minute, it's obviously turning bearish. The 10-minute is super bearish. So you could assume that this is going to continue dropping. This is going to be up to you as a trader when you analyze the charts. If you don't feel comfortable with it, then just skip the trade. But for this specific example, I'll just show you, how the trade would play out. So confirm the trend, bearish, 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 confirm direction momentum. We have a sell signal right here. It doesn't matter if it's valid, invalid. You're just looking for momentum. You want to see which direction price is going. Once you've confirmed that, you can enter again right here. I'll maximize this. Again, at this point, this is the 620 candle. So this is the candle when market closes, or when the market opens and this candle here closes. So your entry would be right here. Again, TP stop loss is 1,500. You can see how there's enough space here. So if there was no candles around this area, this is where you'd go for a smaller TP. But since there's enough space here, you would just take it for the full 1500 TP. So once you have that set up right there, you let the trade run. And there you go, full TP. Right there, blasted right through it. So you pretty much hit your TP within like the first 30 minutes or so. And the good thing about this strategy here is that you have such a wide TP stop loss, so you're not really going to be stressing out too much. I mean, if you wanted to move your stop loss in profit, you could have at that point, but typically the breakout will happen literally on open. So yeah, exactly. Maddie said we should also have enough time to analyze. Yeah, so I'll try to get on the live session like a little bit early. I know typically I get on around 6:20. I'll try to get on like maybe even before that, so that we can review and make sure everything lines up before we actually take the trade. So like literally as soon as the market opens, you just hit sell, make sure to have your DOM set up or something like that. And then you just let the trade run. And that's literally about it. And then on top of this, you can also take scalps within it. So like say you were taking trades here and you go on the 1 minute and then you have like another scalp there or whatever. Like there's a scalp right here, right? So you'd have this trade already running on the 10-minute. And then looking at this candle right here, this is a momentum scalp variation. You take another entry there. So you basically would have tripled up your profits here, because you'd have the daily running, plus you have one scalp right there. And then you got another scalp right here. There's another momentum scalp literally right after it. So instead of just having these small scalps right here, you'd have a $3,000 win right here, another $1,000 win, another $1,000 win right there. So you have a total profit of 5,000 if you took basically all those trades. And then the live session would still go on. So you would still have more entries right here that you could have taken, right? Another one right here. So at that point, you have 3,000, 4,000, 5,000, 6,000 in profit right here. Another one right there, 7,000 profit. So Thursday would have been like a crazy profitable day, right? Because you would have taken profit in so many different ways. Yeah, profit, 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 profit. I mean, there's a lot of wins here. Yeah, Natasha said also the high-low quick scalps if you wanted to take those. I mean, there's a lot of opportunities here to make profit, right? Another one right there, like literally right after. So basically, this is like this daily entry is basically like a buffer for you, right? I mean, if you don't even want to scalp, because I know scalping is not for everybody. If you don't want to scalp, then you can just take the daily and that's about it. If you're only taking the daily, you can take an even bigger risk, because since you're just taking one trade, you can just go for a $5,000 risk instead of a $3,000, because you're not really risking anything else. If you're doing this like once a day or once every couple of days, it's not gonna be a big deal. So Ross is asking, are you going to point out the daily tomorrow? Yes, I will. So I'm going to be pointing it out. I'll probably be taking it myself, but we'll have to see. We'll take it day by day, but I will be pointing it out. I'm not sure if I'll be taking it yet, because I just started testing this out, so I can't really say for sure. I only have so much data on it right now. I have December, November. I'm still working on October right here, and then I got to do September and previous months, and I'll see how that works. But I prefer to forward test, so I don't really care about this. I just want to make sure that it's a proven concept, right? Obviously, it's proven here. I've been looking over it, and it looks pretty good. So I'll definitely point it out, but I don't know if I'll be taking it just yet. Okay, so We went over Thursday. Now let's go over Wednesday. It's the same thing. It's literally the same process. The cool thing about the strategy is that it's just once a day. So you don't really have to worry about like looking for, okay, did I miss the trade or not, right? Because it's like impossible to miss. You'll analyze it before, and then if you take it, you take it. If you don't take it, then just wait for the next day. Or in some instances, you can even enter late. If the trade, if you didn't enter right on opening candle. But again, you should be entering like on opening candle. So, all right, 6:30 right there. This is Wednesday, December 21st. Let's go over here. Wednesday, December 21st, 6:30. Wednesday, December 21st. 6 o'clock. Okay. So looking over the requirements again, the strategy is very simple. It's not that difficult. I think the hardest part about the strategy is probably going to be confirming the trend, but I'll be confirming it for you. So it's not really a big deal. You're going to have me doing the confirmation. So I'll say if it's bearish, I'll say if it's bullish, bearish or bullish. And then you guys can just make the decision whether you want to take the trade or not. So again, right here, first requirement, confirm the trend on the 10-minute. This right here is a little iffy, but you can see that it is bullish because price was already bullish. Again, I mentioned don't focus on the trend meter here because the trend meter is laggy, right? You can see price is kind of going sideways right here, but if you look at the bigger picture here, price has been bullish since like days before or the day before. So it's still bullish. It's just price kind of swung below. So you can see here that price is bullish. Price came down. This is just retracement, right? It hasn't confirmed that price has swung below it yet. It did come below right here, but now it's correcting back up. Price came down, rejected off this point, and it is now correcting right back to the upside. So with this said right here, we're going to confirm that the 10-minute here is bullish. Looking over here on the 30-minute, this is obviously bullish. So this is why you can use this as a confirmation too for your 10, because here it's obviously bullish. You can see that it's been bullish and it's going to keep pushing up higher. So this is bullish. And also here on the one hour, this is also bullish. Price is above the pivots. Pivots are angling up. Trend meter is green. Everything points for a bullish direction. So bullish on the 1 hour, bullish on the 30-minute, bullish here on the 10-minute. Let me just clean this up a little bit. That's pretty much it with step one. Step one, we've confirmed the overall trend. Looking over at step two, you want to confirm the direction of momentum. We have a buy signal right here. We're obviously looking for buys because the trend is bullish. When the candle here closes at 6:29, this is where we're going to be making our entry for a buy. Okay, so this is the thing that I was mentioning where like, oh, sorry, I'm on the 1 minute. Threw me off. Okay, here we are on the 10-minute. So with this right here, I think this might be a little too far off, right? So this is what I was talking about where, see how the TP is like outside of the chart? If you zoom out as far as you can, you still can't see the TP, right? It's too far. And you can see here that the stop loss extends like where price was ranging from pre-market. So if you go back to like London Open, obviously this is a long time since pre-market. So in this case right here, I would probably go for the 1,000 pip TP stop loss because it's just a little bit tighter. You don't want to have it too long because then you might be holding on to this trade for like way too long. So entry be right there. Even right here, it's still kind of far off, but if you zoom out a little further, you can see the TP right there. So it's a lot better than the 1,500 pip move. Once you let this trade run, full TP, easy as that, right? So it's pretty simple. I mean, you're just confirming the direction, confirming momentum, and you're just pretty much riding that breakout to TP. This took about, and it's 3 back-to-back wins right there. It took about like 6 hours. So, I mean, you probably would this be running during our live session. Or no, actually 1 hour. Sorry, I said 3 hours, 1 hour. So it doesn't really take that long. I mean, you could have went for the bigger move, but you're basing your trade off risk here, not necessarily your TP stop loss. If you wanted to continue to let it run, you could do that, but you guys already know how I trade. I'm risk averse. I want to be in and out as quick as possible with my full TP. So pretty quick. Nice. No, awesome. Yeah. Ross said that's good because he's been checking it with success as well. Yeah, no, definitely, Ross. Yeah, if you guys want to test the strategy, I put the requirements there. So you can go back. I mean, I pulled the data already for these specific entries. So if you guys wanted to continue it or, you know, go off further months, you guys can do that. I'm gonna be doing it myself as well. So I'm just gonna keep playing around with it. Wayne Davies is asking, what are you using her indicators? Sorry, I think you might have a typo there. Let me see. You said, what are you using her indicators? I think you're asking which indicators am I using? Indicators that I'm using are my indicators. So I'm using the Kodi indicators. I'm using the Kodi pivots, Kodi trend meter down here, and the Kodi momentum. This is the main indicator that you need. The pivots here, I mean, the pivots and stuff aren't like really going to be super necessary, but I mean, they're used to identify the trend. But the real main indicator here that you're going to need for the strategy is going to be the momentum indicator, because this is really going to tell you the direction of price, right? So this is like the main one that you really need. The other ones, not so much. I mean, they're useful and they help you identify the trend and stuff, but you have a lot of time to confirm that pre-market. So, I mean, the main thing that you'll need will be the momentum indicator right here. If you guys are new here and you guys want access to it, you know, I can see a lot of you guys here on the YouTube. If you guys want access to this, just go on our website, kodikaitrades.com, and then you can click on this to unlock your access. That's how you'll get access to the indicators. Or if you want to watch the live sessions, you guys can do that as well. It's just going to be delayed. So if you're on the YouTube, you're going to have a delayed feed. Like if you guys are on the YouTube right now, it's a bit delayed. It's probably like 30 seconds to a minute delayed. But if you guys are on the Zoom, you'll have it real time. So all right, other than that, let me go back to the next. So let's go to Tuesday now. So I'm just gonna go through these like step by step, I mean day by day, and then we'll see, you know, if we can find other examples. I'm gonna go to one example where there's not going to be an entry so that you guys can know when not to take a certain trade. And I think this is going to be one of them right here. So here is the 10-minute Tuesday, December 20th at 6:30. Wayne is asking how long you traded for. I've been trading for over 11 years now. I've been trading live for like the past 5 years. So if you go back to the YouTube channel, I mean, you're on the YouTube channel, so you can go back and go to the YouTube channel right here, and you can watch all of my live sessions. So I've been trading live every morning, Monday through Friday, for like the past 5 years. But I've been trading in total for like 11 years now. So I've been trading for a while. All right, so let's go back to Tuesday over here. Let me show you guys the example for Tuesday. I want to show you an entry that we wouldn't have taken because it doesn't meet the requirements. So Tuesday, right here, 6 p.m. Oh, sorry, not 6 p.m., 6 a.m. Okay, so here again are the requirements, right? We're looking over the requirements. First requirement, you want to confirm the trend on the 10-minute, 30-minute, and 1 hour. So here on the 10-minute, you can see that price is bullish, right? It's bullish because price is above the pivots, trend meter is green, and the pivots are angling up. So this is going to confirm on the shorter time frame that price is bullish, right? So with this being bullish, we want to confirm that the 30 minutes bullish. Looking over here at the 30-minute, this is actually bearish. It's bearish because price is below the pivots, trend meter is red, pivots are angling down. So this has been bearish for a while now. You can see that these here do not align. Right, this is bearish. This is bullish. Looking over here on the 1 hour, this is also bearish. So it's pretty clear. On the higher time frames, price is bearish. On the lower time frame, price is bullish. With that said, this is not going to meet criteria, right? So this does not meet criteria because you don't have a aligned direction. You want to be trading when there's like an aligned direction where you know price is going in a certain direction. Right here, we can't really confirm that because the 1 hour is indicating price is going to go down. The 30 minutes also indicating that price is going down. It might be swinging up, but for the most part, it looks like it's going to be coming down. Here on the 10-minute, price for trade super heavy. So this is shifted from, it was bearish. Let me go here and show you guys. So this was bearish right here until price broke above it. And now it is bullish. So with that said, we don't have an alignment here for step one, right? You want to confirm the trend and you want to make sure that it aligns on all 3 time frames. So with that said, we can't move on and go to step 2. However, if you just wanted to see where price is going, so say for example, well, not really for example, but you can see here that this is bearish, right? 30 minutes bearish, 1 hour is bearish. If you want to take the risk and you still want to take a sell because you think this is going to correct back down, which I never recommend you guys do, I'll just show you. So everything here is bearish. I mean, bearish on the 1 hour, bearish on the 30-minute, 10-minute here is not bearish. So we can't take the actual entry, but you can see that there's a sell momentum here, right? So if you wanted to go ahead and still take the trade, maybe take it with a smaller lot size, you can still take it. Not that I'd recommend you do, but if you do take it here, have the same setup again. Again, right here, you can see that the range is really tight. So you're not going to go for the 1,500. You probably go for the 1,000. I mean, it's still pretty wide right there. So maybe you want to go for something even tighter, 500. I personally wouldn't even take this trade, but I just want to show you guys different examples here that you can run through. So this looks a little too tight. So maybe like 1,000 would be good. And if you were to let the trade run, you can see that it still hits TP, right? Because you would have assumed that everything here would have lined up for a sell. You would have taken the sell, it still would have hit. I wouldn't take this trade, but I just want to show you guys an example. So, because I know some of you guys here would still want to take the breakout, even though there's no confirmation of direction. And if you were going to, you just use the stronger bias. Longer time frames here are bearish. This was the only one that was bullish. You had the sell momentum there. You could have still taken the sell, and it still would have hit your TP right here. So that's it for this example here, but we didn't take that trade because it didn't align. And I put 2 different criteria here, right? So this is using the trend. We would have skipped the trade there, Tuesday, December 20th, because 10-minute was bullish, 30-minute was bearish, 60-minute was bearish, sell signal, no trade. But if you would have just, this actually won. I don't know why I put loss. This should have been a win. I think I messed up on that. Momentum didn't align the trend. TP stop loss. Yeah, so this actually has another win there. It's 15. So the win rate was actually pretty high. It was higher than it already was. It was 82%. So like 15 divided by 17 is actually 88.2%. Yeah, so I mean, it looks good. So if you guys have any questions about this, feel free to put them in the chat. Otherwise, I'll go over like maybe 1 or 2 more examples, and then we'll go over your USD for Steve. So, all right, let's go over 1 more example over here. Monday, December 19th. So let's just go over here again. Same thing, same exact process. All right, 6:30 right here. Well, let's just zoom through. I'll do these a lot faster because I've already broken down the examples. It's not going to be that difficult once you know what to look for. It's bearish, obviously, right? Price below the pivots, trend mirrored red, pivots are angling down. This confirms a bearish momentum, or not bearish one, bearish trend. Looking over here on the 30, same thing, Monday, December 19th. 6:30. This here is also bearish, right? Price below the pivots, trend meter is not red, but pivots are angling down and they're spread out. So this is going to confirm also downtrend, downtrend, downtrend. Here on the 1 hour, same thing. Let's go to, what day was that? Monday, December 19th. All right, this is obviously bearish. So bearish, bearish, bearish. Go back to the 10-minute over here. We confirm step one. Step two, confirm direction momentum. We have a sell signal right there. You enter for a sell. Right there. TP stop loss. I think 150 is a little too wide. I mean, it just, this is another subjective thing. I don't know if so for me, I think this is a little too wide. I think some of you guys might think this is okay, but it's just really up to preference, right? If you want to go to 150, do 150. I think 100, actually no, 150 looks fine. Because this now is a little tight. I mean, either way, we'll let the trade run. I mean, either way, it still survives the move there. Oh, no, it doesn't. Okay. So this is where it becomes a little iffy with regard to the TP stop loss. I got to figure out a way to really determine what I'm going to use. I think what I'm going to do here is I'm probably going to go back. What I'll do here is I'll just go back to London session, and then we'll determine the range from that point. You know, again, I just came up with this strategy like yesterday or a couple of days ago. So I haven't really been able to figure out when I plan on using the 1500 pip or 1000 pip stop loss. For this right here, it looks like the 1500 would be required because if your stop loss was too tight, you have gone stopped out right here. I don't know if anything happened on Monday of the 19th. I don't know if there was news that day or whatnot, but let's see. So there was NHB housing market index. I can't remember if there was stuff going on that day. That was the 19th, right? Let me check the date for the 19th. I don't know if we took any trades that day. So let's see. Yeah, we actually didn't take any trades that day. So I don't think, I don't know if there was anything going on that day, but we didn't take any trades on that day, December 19th. I was just pulling it up right here to see if I took any trades that day. But I mean, something might have been going on that day that I can't remember why we didn't take any trades. But yeah, I think what we'll do here is we'll pretty much just draw a line here or we'll pretty much mark it at London Open, and we'll see how far the price ranged. If price ranged, you know, high enough, we just want to make sure that the stop loss is going to be within that parameter. Because if the stop loss is too high, like a lot higher than this, then it's going to be too far out. You just want to make sure that the breakout's going to hit at least before the end of the session. So I think 1,500 would be better, because if you did have 1,500, looks like the trade actually would have hit. You just had some of that morning manipulation right there. Price got manipulated up and then it corrected way back down. So we'll work on that. But yeah, there goes another example right there. So if there's any other questions, guys, you know, feel free to put them in the chat. Otherwise, let's see, I'll go over one more example and then I'll analyze Euro USD for Steve, and then we'll probably just wrap this up for the day. Unless you guys have questions. If you guys have questions and want me to go over anything specific, just, you know, drop in the chat. I'll help you guys with whatever you guys need help with. Otherwise, we'll just keep moving on with the rest of the questions for today. Let's see. Jason's asking what time's mentoring session. Jason wants me to send him a yearly chart. That's like way overdoing, guys. If you guys are trading a Forex pair and you're looking for like a day trade, the yearly is not going to matter. I just want to make sure that you guys understand that, because he wants me to send him a yearly chart. I don't mind sending him a yearly chart, but like this isn't going to show you anything. So just keep that in mind, guys. Yearly chart's not going to give you an advantage if you're trading even a swing trade. You're not going to be holding this trade for like a whole year, right? So that's something to keep in mind. here's the yearly chart, but I just found it funny that he asked for the yearly chart. I'm like, if you're taking a day trade or even an intraday trade, these yearly charts are not going to do anything unless you're holding this trade for a year. Because this is Jason's reasoning. So he said, I told him that the daily is bullish, but he said, hey, can you pull up the yearly? That's why I'm looking for a sell. Yearly chart's not going to make a difference. Unless you're holding that trade for a year. Even the daily chart here is not really going to make much of a difference unless you're holding this trade for like a couple months, right? Because if you guys look at the range here, like say, for example, you took a sell right here, right? For June 22nd. If you took a sell right here, your TP wouldn't be hit for like, actually, this one probably would have hit right away, but it still would have taken some time. Like this would have taken, let's see, like 12 days. So unless you're holding these trades for like 12 days or like weeks or months or, you know, extended period, then it's not really going to make sense to really focus on these higher time frames like that. Same with like, say, one of these over here. If you were to take this entry here, like, yeah, if you plan on holding this trade for like a week or like more than a week, it'll make sense. But the yearly chart, that's like, that just doesn't make any sense. Maybe the monthly chart, the weekly chart. Let me just tell them real quick. Let's see, and then his other question here, and because of it's being indecisive, I think short-term gives me so here's another thing too, guys. So Jason basically gave me his analysis for like why he thinks GU is going to go down. I think his analysis is just way too complicated. He's trying to use so many different confluences. So the thing that you guys want to keep in mind, guys, is that you guys want to keep trading simple, right? If you have too many confluences or too many confirmations, you're not going to take any trades because you're going to be too worried about entering anything. So like Jason over here, and this isn't to like bash Jason. Jason's been part of the group for like years now since I started the group. And you know, the thing is, he's not really in the group anymore. I think he's learning from someone else, and that's why he's kind of thrown off, because the person he's learning from is probably making it a lot more complicated than it really is. So for my analysis over here for GU, I mentioned that it was bearish on the 4-hour, bearish on the 8-hour, but the daily here was bullish. He's trying to look at the daily, at the yearly chart, which just doesn't make sense, because if you align these together, he's trying, like, this is his analysis why he thinks price is going down, because the yearly chart's bearish. He thinks this is all going to line up with it. But the thing with GU is that the dollar is always going to be stronger, right? Like, you know, the pound and the dollar is always going to be stronger. Like Brexit happened over the past couple of years. The dollar is always going to be stronger for now. So this here isn't really going to have much of a relevance. And he's also using sentiment over here, which, I mean, I don't think this means anything, right? Because if you look over here, it's 52% short. It's not like this is like 60% or 70% in one direction or the other. He's putting too much emphasis on this, which I think is very irrelevant. So just keep that in mind, guys. If you guys have any questions regarding Forex pairs, you know, just let me know and I can give you a quicker breakdown and example as to like what you should focus on. But I try to keep things simple. Like whenever I call signals, I look for confirmation of trend. Once I have a confirmation of trend, I just look for momentum and I take a trade in that direction. So for example, here, if this is bearish, the daily's not bearish, I probably wouldn't take this trade. But if you were to take a sell at some point, it would have been this one right here, right? Sell momentum. And it would have hit CP. Where I would take a trade here would be something like this. So this is bullish, and this is bullish. This date over here was December 7th. So let's go and rewind this to December 7th. So this here is something that I actually would be okay with, because everything here is bullish, right? Bullish on the 8-hour, bullish on the daily. December 7th over here. This here is also bullish. So bullish, 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 buy signal, everything's bullish. At this point, yes, I would take this trade here. Pretty much right it up to this TP right there, or this target price point. And this is what I mean about keeping it simple, right? Jason over here has so many different things he's looking at. He's looking at the yearly, he's looking at retail sentiment. The thing is, I use retail sentiment for US 30 because these are quicker moving assets. But the problem here is that people are trying to, or I only know this because Jason's not in the group anymore. He's basically trying to transfer my concepts for US 30 over to Forex, which it doesn't work that way. So this right here, I would have taken this buy, kept it simple, bullish, 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 bullish momentum, let the trade run. And then eventually it does, eventually hit CP there. This price continues to move up. So your strategy doesn't have to be difficult, right? For me, I just confirmed the trend. I looked at the trend here, bullish, bullish, bullish. I saw momentum, would have taken that for a buy. And you can see here that eventually it does hit CP. So that's just the point I'm trying to get across, guys, because I feel like a lot of people, they just really, really overcomplicate trading when they shouldn't. There's only a couple of things that you need to confirm: trend and momentum, right? You have those two right there. Price is eventually going to hit your price point. As long as you have a solid TP, like for example, right here, same thing, everything's bullish. Right, everything's bullish. I could have multiple TPs here. Like I could take a buy here. My full TP would be at this top structure, but I could have a TP right here, and I could have another TP here to basically scale out of the position, right? So 137, 137. And the thing too that drives me crazy is when people want to have a super tight stop loss. So if you had your stop loss really close right here to where the swing was, you probably would have gone stopped out because price came down, basically swung down, spiked everyone out of the trade, and then it continued back up higher. TP1 would have been hit right there. TP2 would have been hit right there. And I'm just identifying structure, right? Structure, structure, structure. My full TP would have been up there and it blasted right through it. So trading doesn't have to be that difficult, guys. The difficult thing is really just following directions. Like if you guys learn my strategies, as long as you follow directions, you could be perfectly fine. The only reason people really fail when trading with me is because they do their own thing. So just keep that in mind, guys. Anyways, one question that we need to cover is Steven's question for Euro USD. Let me go and pull that up real quick. Sorry, Steven, I know you've been waiting for a while. Kind of went off track over here. Ooh, quick enough. All right, so yeah, Jason will probably come and review this at another time. But yeah, I'm glad that he actually reached out to me for my analysis, because I think he'd probably be going in circles if I didn't give him my breakdown as to how I see it going. So yeah, if you guys have any Forex pairs that you guys want me to analyze, I can analyze whatever you guys want. It doesn't have to be Forex. It could be gold, it could be stocks, it could be anything. My concepts here apply to everything, not specific ones like retail sentiment here. I wouldn't use this for Forex. I mean, you can use it for Forex, but not when it's so tight, like what Jason showed me. Typically you want it to be above or below, 60%. So anyways, here's Euro USD. Steve. Looking over here on the daily, it's currently bullish. You can see price is above the pivots, trend meters green, pivots are angling up. Same with the 8 hour over here, it's also bullish. Trend meters green, pivots are angling up. And then lastly here on the 4 hour, it's also bullish. You can see price is above the pivots. The trend meter is currently blue, but this will probably shift as price continues to push up higher. Looking at current direction, price is actually ranging right now. So it's not really something that I would prefer to enter. But if you were to enter here, my bias would be for a buy, right? Bias would be for a buy here. Target price point would be either this high here, because price continues to bounce around this area. And this is another reason why I wouldn't want to trade here. However, if you were to take a buy here and you wanted to really ride the full potential would actually be over here for the current move, because this is the structure that was spiked across right here. Price spiked above it, but it didn't really, continue up higher. So if price was to continue to be bullish, so if you were to take a buy here, this would be your TP1, this first blue line. If you were to enter a trade right there and your trade was to hit that point, at that point, I would move your stop loss and profit. We might see here is we might see, depending on news, I don't know if there's news this week. Let me check. We have unemployment claims right here. They're forecasting it to be worse. So looking over here at the news for this week, on Thursday, they're forecasting unemployment claims to be worse, so not good for the US economy. And then also Chicago PMI here on Friday. So with these two right here lining up, my guess is that price is actually going to be bullish and it's going to hit this target right here. If you're not familiar with like how Euro USD moves, basically when price is going up, this means that the euro is stronger than the dollar. It moves like a weighing scale. So like when price goes up, this means that the first currency here is stronger than the second. Since the US news this week is probably going to be negative, I think this is probably going to continue pushing up higher. Vice versa, when price is going down, this means that the second currency is stronger than the first. But since the news this week is probably not going to be positive for the US, I'm expecting this to possibly continue up. The thing that you also want to keep in mind though is you've probably heard about it on a lot of different trading pages, which is like I think people call it the Santa rally or the Christmas rally. Typically at the end of the year, the US dollar is usually supposed to be strong. So I mean, it might be a fake out, honestly, like the way that I'm looking at the market, it might be a fake out, and this might continue to it might not have that rally that it typically does every year. Usually at the end of every year, the US dollar is strong because they like to close out the year strong. But the problem is this next year, we're going into a recession, or we might already be in one. So it might not be how it's been moving for the past, X amount of years, because we haven't been in a recession for like the past, I don't know the last time we were in one, or in 2022, I think probably like 10 years ago, we're in a recession. So it's kind of hard to really gauge the data. So, looking over here at your USD, this thing could really go either way. I personally wouldn't want to take any trades because I don't trade when price is going sideways like this. But if I was to choose, a direction, it'd probably be bullish. But again, I wouldn't trade it because price is going sideways. The problem with price going sideways right here is that price can break out one way or the other. So you're basically taking a gamble here. It's either you get lucky and price goes in your direction, or price might spike down, stop you out, and then go in your direction. So just something to keep in mind, Steve. If there's any specific questions regarding your USD, feel free to drop them in the chat. Otherwise, I think my analysis right now, long term, I think it'll be bullish. However, I think short term, we really don't know because price is just going sideways right here. So over the next couple of days, price may spike up or down. But the thing that you want to keep in mind is the upcoming news this week. So it might just be flat for Monday, Tuesday, Wednesday, and then Thursday, Friday, price might actually move once we have the news events that are released. And these are the last news events for the year. So it's probably going to have a pretty big impact on the direction of price. Yeah, Maddie. All right, I'll see you later. Maddie had to head out. So yeah, if you want to swing by, Maddie, I think Tommy's coming by and everybody. So if you want to come by, come through. Let's see if there's anything else over here that I need to cover. Eunice said he's been trading the high-low quick scalp and it hits most of the time. Maybe you want to take a look at that on the 5-minute. Nice. So Eunice over here has been applying the high-low quick scalp on the 5-minute time frame. Yeah, no, I'll probably look at it. I probably won't be focusing on it during the live session though, because we're still going to focus on the momentum scalps. But just looking at the 5-minute over here. So let's go back to like Friday, right? For example. So Friday over here. Actually, this thing was a mess. On Friday, I don't think we'd be able to. We'd have to have some sort of direction. So the way that I would look at the high-low quick scalp, guys, is if you have some sort of direction of price. So if I'm going over here I'll just rewind this to 8 o'clock because 8 o'clock is typically, our cutoff trading time. Friday at 8 o'clock. Yeah, there really wasn't too much direction here. Maybe we could go back to the previous day, like Thursday. I think Thursday here would probably be a little bit better. Do Thursday until 10. Yeah, so looking over here on Thursday, the market was pretty nice. With regard to direction, because there's actually pretty good direction here. So what I would do here, Eunice, and I know you've been applying it, is to confirm the trend, right? I think if you confirm the trend, you'd have a lot of opportunities for entry here. So just looking over here on the 5, like you mentioned, Eunice was applying the high-low quick scalp. And it's interesting that you do it on the 5-minute. So if I go and rewind, because market opened here at 6:30, basically at 6:30, it was bearish. It was bearish from 6:30 until 10. So like the quick scalps that Eunice was looking for here, and I'm assuming your TP stop loss would probably be like it'd probably be like 25.50, right? Because that's basically what I'd be using too. 25.50. There's a quick scalp right here on the next candle, full TP. Yeah, so there's one right there, full TP. See if we find another one here. Price kind of swings up again right there. See if this one actually hits. That one hits full TP too. Yeah, Eunice said he wouldn't have taken the second one because price was ranging. Yeah, I probably wouldn't either because price was just ranging around this entire area. But it looks like it would have hit, but yeah, it would be risky. Yeah, as long as you trade in the direction of the trend, these quick scalps work pretty well. So another one right here, possibly. Yeah, that one hits full TP too right there. So there's like 3 back-to-back full TPs right there that all work pretty well. All right, Douglas, we'll see you tomorrow. But yeah, no, the quick scalps do hit pretty well. I think the 5-minute might be better than the one actually, like you mentioned, because there's less noise on these time frames right here. Yeah, Eunice said in order to take another one, it needs to break and close below the lower low. Gotcha. Okay, so that's another requirement that that Eunice applies. He waits for it to break and close below the lower low. So no, that's a smart idea. Actually makes sense. Maybe that's a requirement that we should add to it. Eunice, thanks for mentioning that, because there was a lower low here, and this is the one that you mentioned, which was risky. It did hit, but it was risky, and then it finally broke below right here, and that's where you would start looking for another one, right? So that looks good. Yeah, Natasha said she takes him on the 5-minute as well. So yeah, 5-minute might be the better time frame to trade this high-low quick scalp. Yeah, Eunice said if there's a new low high without breaking and closing below the lower low, he considers it ranging. Okay, no, that's definitely a good thing to look at, because yeah, like you mentioned here, when you get that and there's no lower lows or higher highs, it usually identifies as a range. So yeah, no, smart move there, Eunice. And that's definitely something that we can use to our advantage. Ross is asking for the requirements for the high-low quick scalp. I don't even know where the requirements are. I have too many requirements. I'm gonna delete some of these strategies because it's just too I got too much on here. I don't even know where it's at. Where's the quick scalp? I don't even see the requirements on here. Oh, there we go. Um, this is for the 1 minute though, Ross. So just make sure that you're applying the proper one to it. I mean, the difference is just the TP stop loss. So the main difference is you're just going to change the TP stop loss for the because this is 100, 200. Typically you would use it's same 1 to 2. You'd be using 25, 50 or 250, 500. So I'll look at the requirements, make sure everything is okay. Yeah, no, it looks fine. Yeah, because we're looking for sells here. Identify bearish direction, high low, top wick. Yeah, no, this looks fine. Cool. So there goes the requirements for that there. So yeah, no, thanks for bringing this up, Eunice. I'll probably I'll send this over to Maddie too, because I know Maddie loves to apply the high low quick scalp. This is like the thing he likes to apply. I think the 5 minute would probably help him a lot more too, from getting caught in the little whipsaws on the 1 minute. So all right, guys, I think that's it for today. We've been on this mentoring session for a little over an hour. So if you guys have any other questions, feel free to put them in the chat right now. Otherwise, you guys are more than welcome to email me or message me on Telegram. My email is sean@kodikaitrades.com. If you guys are new here and you guys want access to these indicators, just go on the website, kodikaitrades.com. Click on unlock your free access right here. It'll take you to the website. And then from there, you can choose whether you want the free intro course and you just want to get a feel for everything, or if you want access to the actual indicators, click on this right here. Or if you just want access to the Zoom, click on this right here. Otherwise, if you guys want to go and review my previous live sessions or previous mentoring sessions, everything is on the YouTube channel. So just click on this link right here. It'll pull up the YouTube channel. If you go to videos, you can view pretty much all of my strategies, live trades of the week, live trading results from everybody in the group. The ones with the red are going to be the strategy explanations. Yellow or gold is going to be the live trading results. Purple is going to be live trade of the week. If you go to live here, this is going to have all of the mentoring sessions and live trading sessions. So all the blue ones are live trading sessions. All the green ones are group mentoring sessions. All of the orange ones are one-on-one private mentoring sessions. And everything's pretty much here. So if you guys want to go back and review that, feel free. Otherwise, I think that's it for today. Ross is asking, can we trade a FTMO regular account today now? Today, I believe so, yeah. You can trade now because the market, this is a new day, Ross. So the new day started at about, or not for Forex. So if you're trading Forex, I think it's still in the spread. It's in a swap spread. So I wouldn't trade Forex until or I wouldn't trade anything until maybe past 5. I know the market's moving here, but the new day technically hasn't started for Forex. I think the new day starts at 4 p.m. my time. Yeah, US 30 you can. There's no cutoff for US 30. I mean, is US 30 moving yet? I haven't really seen if it's... Yeah, no, it's moving. It's open. Yeah, so you could trade US 30 if you want, and I wouldn't recommend trading it until tomorrow, but if you wanted to trade it, you could. When you come back from a long holiday week like this, you guys gotta let the market ease in, right? So if you guys want to trade, I would probably wait until tomorrow. I wouldn't even trade tonight, because you're gonna get a lot of this manipulation here, because the market still isn't technically open yet. You see how slow the market's moving? This is just retail traders who are just too antsy to wait for the market to actually open. So you're not going to see any actual movements until, the actual institutions get into the market, which is not going to be till tomorrow morning. You're probably going to see some movement here from the Asia markets. It'll push it around a little bit, but the Asia markets compared to the US markets is you can't even compare the two. So you're probably going to see some movement, but it's not going to be any real movement. So if you want to trade, you can, Ross, but I wouldn't recommend you do. If you want to trade, I'd play around with the demo or even take small lot sizes, but the volatility here is just way too slow to take anything. Yeah, this big candle happened on open because people are buying the dip from the weekend, and a lot of these orders are just filling from the weekend as brokers are starting to reopen. but you're probably going to get a flat movement from now until like London session. Because yeah, Asia session is the slowest. London, it'll pick up a little bit as you know the London firms start to hop on, but then the real movement's not going to happen until like tomorrow morning. So, all right, guys, I think that's it. If you guys have any questions, feel free to reach out. Otherwise, I will see you guys back here tomorrow morning for the normal live session, 6:30 a.m. I'll try to get on a little earlier. Typically go on around 6:20. I'll probably get on like maybe earlier, like 6:10. So we have time to analyze US 30 for the possible breakout 2.0 tomorrow. Yeah, the rules are a bit tricky, Ross. If you're confused about the rules, reach out to FTMO directly. Just hit up their support and they'll let you know. They change the rules pretty often. So for me, I don't even bother risking it because I've lost accounts due to like small violations, like little technical violations that they have with regard to the rules. So if you're ever like questioning it, just go to the website and hit up their support. They'll let you know right away, but I just don't even want to risk it. So Dreamy's asking, how do I get your indicators? Just go on the website, kodikaitrades.com right here, and then click on this to get access to the indicators. This will bring you to the next page where you can choose which options do you want. So, all right, guys, I think that's it for now. If you guys have any questions, feel free to reach out. Otherwise, I'll be back here tomorrow morning for the live session as we officially kick off the trading week. So till then, guys, I'll see you guys